is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome to another episode of DeFi Decoded. I am Alex Tapscott, here with Andrew Young. Andrew, Bitcoin has been teasing that $100,000 level. It got through it a couple of months ago, largely on the back of excitement around Bitcoin as a store value asset, or as what they call internet native money that basically allows people to move and store value peer-to-peer without traditional intermediaries like banks. But in the early days of Bitcoin, you'll remember a lot of technologists believed that Bitcoin was going to emerge as a way for individuals and businesses to transact and store value in basically any kind of asset, all peer-to-peer. Bitcoin would be essentially a new internet of value, and all economic transactions would settle on it. So as I'm fond of saying, there's nothing so powerful as an idea whose time has come again. And in the last 3 or 4 years, but I think over the last 18 months, we've seen this resurgence or renaissance around the idea of Bitcoin as an ecosystem and Bitcoin as a platform for the enablement of new kinds of assets and applications and new kinds of marketplaces, right? The idea that this platform is the largest, most secure, longest running, most resistant blockchain on the planet, maybe the most censorship resistant and secure computing network ever created. Why shouldn't we be using it as the basis for all manner of economic transactions? So it's a really compelling idea because it all of a sudden kind of blows the doors open on how valuable Bitcoin could be. People think of Bitcoin in the context of gold, and the value of investable gold is maybe $10 trillion. Bitcoin is 1.5 or 2. So everyone thinks there's 5 or 6 times upside for Bitcoin to supplant or complement gold as a store of value and a portfolio asset. But if it's the underlying platform for all economic transactions, or a big chunk of transactions, if everything happens on chain, which we've long maintained, and Bitcoin gains a huge chunk of that, well, the value of that platform is kind of hard to quantify, but it's probably a lot bigger than that. So how do we get from where we are today to that future? Well, we have a really great guest to help us dig into the Bitcoin ecosystem opportunity, the layer 2 opportunity, everything that's going on from DeFi to runes to new token standards to layer 2 networks. And that is Brian Mahoney. Brian is the co-founder of Mezo. He carries over 8 years of experience in the crypto space, navigating the intersection of finance and technology. He's got a background in TradFi like myself, and transitioned into the crypto world, leveraging his experience from roles at HSBC, Lazard, AlphaPoint, and ARK Fund to drive innovation in DeFi and digital assets. Mezo is part of Thesis, which is a pioneering venture studio that's dedicated to building on Bitcoin and has been doing so since 2014. So Brian is a great guy to help us kind of dig into these topics and help us kind of see the bigger picture of what's really going on in the Bitcoin ecosystem. So Brian, thanks for joining. Welcome to the show.
Yeah, I appreciate that, Alex. Thanks for having me on. Happy to be here.
Great. So let's talk about Thesis and Mezo and
Yes.
what you're up to these days. So I gave a bit of a background, but why don't you tell us and tell your audience, what are you up to these days?
Yes. So I lead at Thesis. We are what we call a Bitcoin venture studio, which means we build Bitcoin and Bitcoin-related products in-house. And everything we do is aligned as close as possible to the underlying Bitcoin ethos, meaning all on-chain, open source, and ideally community-led. Although, typically it starts at our studio and then we open source it and spin it out. We do make some financial investments, but most of the time we're more of a studio model where we actually commit our own resources and build products. And we've been doing this for over 10 years. So we started back in 2014 and have launched 6 companies over that time period. Companies like Fold, TBTC, Mezo, which you mentioned, Acre, and a few others. And so everything we do is sort of underlying and really focused on driving and productizing the next wave of Bitcoin innovation. And maybe I'll just touch on quickly my background, just so folks have a little kind of understanding of where I came from. So I'm a Wall Street guy turned a DeFi degen, I guess. Fell down the rabbit hole in about 2015 spent a number of years in Wall Street banking, pretty much had every hat you could wear at a bank, from corporate finance to leverage finance to the trading side, investment banking. So got sort of the full gambit of, what financial products and sort of how, the underlying markets work. And then came across this sort of interesting technology via getting introduced to Bitcoin, blockchain technology specifically, recognized and saw, I was in New York at the time, recognized and saw the potential for it to revolutionize capital markets entirely. And really haven't looked back. So since I've been in the space, and even prior to Thesis, everything I've done and sort of been working on has been at the intersection of really bringing more capital on chain. Because it makes sense, right? We live in a world that's digitally native. We're on our phones. Everything we have and do now are increasingly more digitally enhanced, and it would only make sense that our money and the way we transact and capital flows are too. So that's really kind of what drives me in the space. And in other words, democratizing access to capital using kind of internet rails.
Yeah, awesome. So, I mean, starting in 2015, like a lot of people that began back then first got their start interested in Bitcoin, but they also were...
and ETH was starting to become a thing as well.
And ETH was, that's what I was going to say. Like at the time, Ethereum 2014 was the token sale, 2015 was the launch. And this is right around the time that Andrew and I also got involved. And a lot of people saw, Ethereum as this platform, right, that could be used to kind of fulfill a vision that a lot of people had about what blockchains could do, the digital rail for other kinds of assets.
That's right.
And in the past 2 years, in this ensuing period, like we've seen blockchains, they have become platforms for, fiat-based stablecoins, NFTs, DeFi applications, RWAs, digital infrastructure networks like DePIN and so forth. But most of that stuff until recently has happened on Ethereum and then increasingly on some of these alternative layer one networks. Were you always a Bitcoin guy, dating back from then, or did you sort of have a multi-chain thesis?
Yeah, it's a great question. I definitely would align with sort of the Maxi, Bitcoin Maxi, or we call them Bitcoin Stoics internally. I think Maxi is maybe a little shrewd in terms of the reference there, but in terms of the way we think about it and my alignment, really what I'm after is democratizing access to capital, and kind of alignment with just freedom of how you can control and own your right to money. Which is one of the critical pieces that we need to have sort of in this capitalist society, and unlocking that. I saw kind of from the inside out the way the capitalist system, with the sort of pre-internet era, with banks being built on technologies that were made before the internet, like the Swift network, for example, and the bureaucracy and sort of bloat that is ensuing in a lot of these traditional institutions. And obviously they provide great value to society, but there's a tremendous opportunity to improve that and upgrade, especially now that the internet is eating everything, across all sectors. And so for me, Bitcoin was definitely the tip of the spear in terms of, my excitement and involvement in crypto. And obviously I've done, other things outside of just being Bitcoin focused. But ultimately, what motivates me is the principles and alignment of Bitcoin. And that's, kind of what I've stayed tried and true to since my time in this space and continue to do. And so I did take a little side quest, I guess, in the Ethereum world at one point, but that's because, there wasn't a whole lot of innovation happening on Bitcoin on chain at the time. But I boomeranged right back with kind of this resurgence and renaissance that's been happening over the last couple of years with Bitcoin, not just from like a macro and sentiment standpoint, but also, new innovations that have been unlocked more recently with some of the new things that have come aboard, like Bitcoin NFTs, for example, or the ETF, right? Things like that have really, I think, sort of been a lightning rod for, catalyzing new kind of adoption and interest and bringing a lot of the developers and builders back to the Bitcoin chain.
Yeah. I think we should use that as a segue to talk about like what are those innovations that have happened in the last couple of years, and how are they being embraced within the Bitcoin world? Because in my introduction, I talked about how it just makes so much sense that this network ought to be the platform for all this stuff. But that's really just a vibes-based approach, right? Like, it makes sense. But what is the actual technology that's being built? And can the Bitcoin network really function as a platform for innovation in all those areas? Or is it sort of limited to some degree by its design? Can you talk about like what are the actual tech sort of
Sure,
innovations and breakthroughs?
for sure. Yeah, so I think let's be clear. The number one use case for Bitcoin is still HODL, or just holding and speculating. I think that's what most people are doing. If you look at the data, there's a lot of great analytics sites that track this, but most folks are and participants in the Bitcoin asset class category, which is not a small category. It's hovering around 2 trillion right now in total market cap. It's pretty sizable, as you mentioned in your intro. But most of those most of those folks are just holding, right? And then a couple key things sort of happened in the last 2 years that have reignited excitement for builders, especially because on the Bitcoin's a community-led project at the end of the day, right? There's no central party that owns it per se. Obviously, there's central contributors, exchanges, for example, right? They custody your Bitcoin for you, but they're not actually running or owning Bitcoin as an asset. So that's a key distinction to just highlight. And then in terms of the innovations that have occurred, some have been technological and some have actually been more like regulatory and macro driven in nature. And I think, one of the key things that sort of led this charge happened early last year, so early 2024 and late kind of 23 was this, the Bitcoin NFT movement, which if you know, or your audience knows about ordinals, right, or BRC20s, you might have heard of these sort of things. It's basically a couple contributors to the Bitcoin ecosystem unlocked a way for you to launch a non-fungible token on the Bitcoin L1 chain, which is the core of where spot Bitcoin and what we know of as Bitcoin is hosted. And that was really a key innovation because it showed people that, wow, this is not a dino chain or dinosaur chain, right? But there's actually some potential here for moving the ball forward and while staying true to Bitcoin innovation and ethos. And so that was kind of this like milestone moment in the space. And off the back of that, you've seen a lot of capital pouring into innovating on the next wave of Bitcoin. Because prior to that, it was a little more sparse. Like there was projects like Lightning Network has been around for a while, trying to upgrade Bitcoin and create payments, right, and create the payment mechanism for Bitcoin, which is gaining some traction, but hasn't been like sort of an obvious unlock inflection point moment for Bitcoin. When you contrast that with like the Bitcoin NFT movement, that's really, I think, one of the main catalysts. And then on top of that, there's this other technology that's been come out with a white paper and kind of in the process of being implemented. Some projects have started to adopt it. And that's this thing called BitVM, which basically is a way to scale the Bitcoin network in a one of N signers model. And really what just that means is like a way for folks to deploy and use their Bitcoin in a more scalable way that's more efficient from a cost standpoint and also maintains that Bitcoin network security, which is critical, for the future of Bitcoin, especially as, threats like quantum computing and other, sort of major things like that come online and continue to sort of push the boundary of what's possible for Bitcoin. And then also we have an explosion of wrapped Bitcoin assets, which is, I would call actually the ETF as this. And also there's other ones, maybe your audience might have heard of like WBTC, which has been around since, which W stands for wrapped. And that's kind of the original one. We started one called TBTC. There's another one that came out more recently from Coinbase called CBBTC, right? So these are all various ways to put your Bitcoin to work and really kind of beyond like the HODL or speculative use case for Bitcoin and open up fungibility to other components of deploying. So, from an on-chain perspective, there's not really a place, like if you hold spot Bitcoin right now, your options for earning yield or putting it to work and growing your wealth outside of like principal appreciation and just like holding and hoping the price goes up, you usually have to trust some sort of centralized intermediary, right? And a lot of people aren't comfortable with that. And we've seen that model fail time and time again, Celsius, BlockFi, FTX in the last cycle, but dating back to like the Mt. Gox, and these, which are centralized exchange. So, these models do work if credit and assessment is done well and they have good risk management in place, but a lot of the times that gets skewed. So People just would rather not trust that system entirely and hold and self-custody as much as possible. But this sort of wrapped Bitcoin asset category opens up an opportunity for people to access and deploy in those yield opportunities and do it in a self-custodial way. But there's a lot of varying degrees of information and sort of, ways to assess these opportunities. And that's kind of where we find ourselves right now. And then you also have this, L2 or layer 2 category, which is basically a bunch of projects. We have a Bitcoin L2 as well, that are creating like side channels or side chains to Bitcoin for scalability and deployment. Again, not just for yield opportunities, but also for building ecosystems and kind of like mini economies. I think that was one of the top funded sectors last year from a venture capital standpoint. I don't remember the number off the top of my head, but there was quite a number of projects that did very large raises, to 10, 20, 30 million size rounds to build Bitcoin sidechains or Bitcoin L2s. And we're seeing quite a large convergence of a lot of these concepts that have taken a few years to kind of build and primitives to build out come together. And I think, layered on with the tailwinds from the macro sentiment, especially here in the US, the policies are opening up, the economy's opening up. I think it's going to be a pretty interesting time here for Bitcoin as we look ahead to the next kind of 6 to 12 months.
Yeah, I think I'm really happy you touched on the Bitcoin yield, because the number one question I get from listeners of our podcast who tend to be kind of TradFi people who have crypto knowledge, but sort of lean more, they're not full-blown crypto natives. The number one question I get from them is, I'm earning like a 5 to 6% yield on my Ethereum. What's the Bitcoin staking? Like, how do I get a yield? How do I get a relatively risk-free yield on my Bitcoin?
Yeah, that's a great question. I personally myself am looking for the risk-free rate for Bitcoin. I'm not sure. And we're working on building it. I'll tell you that, and it's definitely not an easy lift. So I think maybe we take a step back, and then I'll address the question head on, just in terms of like the way that at least that I think about yield in this industry, and generally speaking, there's 4 components to yield on chain, and this you pick your ecosystem. Doesn't have to be necessarily Bitcoin. There's not a whole lot of opportunity on the Bitcoin L1 right now, but if you look at like Bitcoin L2s or side chains, as well as like places like Ethereum, Solana, there's usually kind of 4 categories for deploying, with each of their own sort of risk profile and degree of, I guess we'll call it not necessarily rehypothecation, but there's definitely some credit risk underlying, depending on where you're kind of going. The first and generally what considered as like the risk-free rate, or as close to it as possible, in the baseline yield, is staking, which in essence, what you're doing is providing network security to an underlying proof of stake system. So Bitcoin, let's remember, it's proof of work, right? So the consensus mechanism and the way it works is a proof of work system, versus Ethereum and other EVM compatible chains, as well as non-EVM. They're generally proof of stake, meaning you use capital to secure the network as opposed to like work or energy. Okay. So by staking your underlying asset, Ethereum, you earn a bit of yield on that, right? Or on Solana is another example. Okay. So there is an attempt to replicate what Bitcoin, or rather this EVM sort of approach with Bitcoin, but very hard to do on the Bitcoin L1, because that would require a complete upgrade and change, or maybe not an upgrade, but a complete change of the Bitcoin consensus system. So Bitcoin staking is really happening on a lot of these sidechain or Bitcoin L2s, and it's a pretty novel kind of new primitive for Bitcoin. Remains to be seen whether or not it'll be sustainable and actually the risk-free rate can be unlocked. I know there's quite a few projects working on it in the space. It's a well-funded category, but again, proceed at your own risk, I would say, because it's definitely not proven there. The next layer up is not at the protocol layer, but actually at the app layer. Okay. And this is just basic. You can think of it as like decentralized exchange or just an exchange, a swapping component. You can clip fees on swapping and earn yield that way by provisioning or providing capital to a pool. So if you deposit capital in a pool, someone will take that, swap for it on the other side, and you get paid a little fee. That's some yield technically, right? And then it's pretty, especially if you're going in single-sided, it can be pretty easy to manage that. It's basic like Uniswap, right? Something like that. Then the next layer beyond that is lending, which depending on where you're going to a centralized player or an on-chain player, there's credit risk involved. But in DeFi, it's permissionless. And on-chain, it's permissionless 24/7. There's no sort of third party. So usually these systems are over collateralized in nature, meaning you can only borrow up to let's say 75% LTV, loan to value. And that generally has worked pretty well. Like Aave is kind of the flag holder on this, scaled quite well. And then the next category after that is derivatives, which perps, other types of derivatives exchanges out there. The riskiest, where you can really get creative and lever up, and that's where the yields, can be quite juicy, or returns can be quite juicy. But that's not for everyone. Certainly, play your own risk there.
Yeah, that makes sense. I'm curious to see, I guess, just taking, if you were to have a sort of a prediction, what do you think will end up being? Do you think there'll be kind of like a dominant sort of yield product, I guess? Or I guess what I'm trying to say is the Ethereum ecosystem, it's kind of everything's built around staking. And then there's obviously like Aave and, the on-chain stuff and whatnot. But staking is by far the biggest sort of TVL.
Yes. Led by Lido, which unlocked that.
Lido, yeah, exactly. So I guess what I'm curious is, do you just think Bitcoin is just really early, and so we don't have kind of a dominant sort of, I guess, black hole for liquidity? Or do you think the Bitcoin ecosystem is inherently going to be more fragmented in terms of where TVL goes, how people earn yield? I guess, does that kind of make sense?
Yeah, for sure. I think staking isn't going to be happening anytime soon on the Bitcoin core chain. Just to get any changes through on the Bitcoin L1, it's gonna take a while, and that's just how it works. Because it's not a bug; it's actually a feature, right? You having the decentralized governance, that's a key component of sustainability of Bitcoin. In some ways, slow government can be good, right? There's an argument kind of both sides. So staking, in essence, for Bitcoin is a bit of a misnomer, but you are technically staking on this other layer 2 because it's an EVM, and I think that as a category will take off. But the user needs to understand that they're not actually sitting on the Bitcoin L1 chain. They're not proof of stake securing the system. That you're securing another chain that happens to be using a wrapped Bitcoin asset for it. So we have a chain, for example, called Mezo. It's building on a Cosmos EVM stack. So it's a little more neutral because some maxis they get a little maybe allergic to the Ethereum word. So we chose to build on Cosmos because it's quite good from a tech infrastructure standpoint, and it still has that compatibility. Because the reason why people build now non-EVM is opening up, which is like Aptos, Sui, Solana. That definitely is a category that's rapidly advancing, but still most of the FTV value, largest market cap kind of products and services in the space are on EVM chains. And you need to access that, right? You need to have that fungibility and liquidity. Otherwise, you're going to launch a product that it's going to be extremely hard to get that fungibility and volume flow in out of the gates for even it to become a thing. So a lot of the Bitcoin L2s are opting to be, and there's, about 100 plus that I know of. There's a few websites out there that track them. And usually they have some degree of a bridged Bitcoin asset, typically. They usually have some flavor of an EVM compatibility. And then they have, similar kind of decentralized exchange, lending, and derivative type apps on their chain. But, varying degrees of adoption. I think, there is an abundance of them. If I was, to make a prediction on sort of how this category emerge, I think it'll be just a few ultimately that survive because, the users, we have too many choices in this space. Tokens are exploding exponentially. It's hard to even keep up what's going on in terms of the new meme coin that launches or whatever, the new project that launches their token. This is just continuing. It's, like Moore's law of tokens, advancement almost. And I think that's kind of what the same thing's happening in some of these side chain communities. And so I think, where this will go is, there's going to be a few kind of core flag holders that unlock on-chain opportunities. And that's, hopefully will fill the vacuum that's been left by some of these, centralized lending opportunities or lending companies of the past. Because fundamentally, people want to grow their wealth, right? That's a thing that's not going to change. I mean, that's been true through the test of time. And so, but people are getting smarter, the market's getting smarter. And so I think we'll continue to innovate and get better and better. And, another key unlocked area that I'm focused on and really spending a lot of time on is like the user experience, the user interface side, which I think there's a lot to be desired in this area. I don't know about you, but I don't really like jumping through like 12 hoops to like put my capital to work and then come back, and all these complexities that are involved there, risks, et cetera, et cetera. So I think that also that's a big area of the market that's getting, ready to sort of, be a huge unlock for as more and more retail and kind of macro, mainstream and investors come in.
So I want to talk a little bit about how people can think about Bitcoin in the context of everything you've just described, right? So like there's a certain like Bitcoin maximalist point of view that like, Bitcoin as a store of value and censorship resistant money is the use case, and all of this other stuff is sort of nonsense, I guess. That's a very hard line point of view.
Yeah.
And now there seems to be like Bitcoin, ecosystem maximalism, I guess, where it's like Bitcoin is the platform, Bitcoin's utility as a HODL asset, plus all of this ecosystem development, it's all going to happen here. And so that's where all the value accrual will occur. And then what I'm hearing from you, and please correct me if I'm wrong, is like Bitcoin is going to exist in a ecosystem of other chains, right? Like a constellation of other chains that, you're building some stuff with Cosmos Tech, you're making sure that there's some EVM compatibility. Implicit in that statement is a point of view that EVM compatibility and Cosmos and these things are useful and interesting technology, right? Like maybe you think that Bitcoin is superior in various ways, but it does assume that you think this is interesting. So in a way, like, what is the role of Bitcoin in this world? Is it like the settlement layer? Is it something else? Like I just want to think of like, what is your sort of worldview in an environment where all of this stuff is happening and developing? Like, what is Bitcoin in this context?
That's a great question. I mean, it's the deepest market.
Yeah, it's the deepest market. Yeah. Sorry.
And definitely the most proven. It's really, it started an entirely new asset class, right? Which is digital assets generally. And there's multiple flavors of, just like there's multiple flavors of different commodities, right? There's multiple flavors of different securities, which are both asset classes at the end of the day, right? We now have this digital asset category that rhymes a lot with the securities and commodities kind of classification of the regulatory regimes of the past. But they also have inherently new features within them, because at the end of the day, they're just code, right? And code can be modified. Now, Bitcoin cannot be, right, unless there's a community consensus, and that's where the decentralized governance comes into play. But I think, fundamentally, Bitcoin is this HODL asset, ultimately, that is a great hedge against, kind of like when people buy gold, right? And also a hedge against things like inflation. These manufactured, dollars. I think we've all heard kind of the arguments around these various use cases for that validate Bitcoin. But for me, what I'm interested in, and where I'm spending most of my time, kind of this Bitcoin existing amongst this world of chains, is I believe that we, from a capitalist standpoint and Wall Street, the world is going to continually move on chain. So I almost think of like blockchains as a technology as sort of like this new money transmitter network, kind of like a SWIFT network, right? Because the SWIFT network, at the end of the day, it's, when you log into your bank account, right? Just take it like a simple example, like your Chase Bank or pick your bank. What you see on the screen is an IOU, technically. Because what's going on behind the scenes, and there's nice disclosures buried at the bottom of the page or behind the scenes, whatever. But what's happening is ultimately the bank, you're committing into an agreement with your bank to store your money, your dollars, typically, right? And they're rehypothecating and lending that out on the other side and then paying you back some small interest there. And the problem with that model, yes, you have insurance, and the U.S. example, U.S. the FDIC insurance gives you comfort and security there, right? But we've seen banks blow up, all the time. I mean, look at Silicon Valley Bank most recently, right? So the reason that I think the world is continuing to move on chain and why this makes sense and blockchains are sort of this unlock and innovation, because there's a significant cost reduction component as well as a significant increase in transparency in how the money flows of the world work, right? That's why Elon Musk most recently is like advocating for the government, through this Doge initiative, the US government, to start to employ the use of blockchains, right? Because it's a more effective way for data to be transmitted and asset values to be moved across the world. Because the internet has connected all of us. There's this global sort of pulse, and we're still using money systems that are outdated from dating back to pre-internet era, right? So I see blockchains as sort of like the new Swift network, at least in the context of money. Now they have other use cases, but at least in the context of money, right? And then you can plug in different assets, different structured products, et cetera, just like the way Wall Street works right now on these chains, right? And Bitcoin is the top of the funnel. It's the largest market, the deepest liquidity. And from there, you can continue to pool and drive and open up other opportunities. So we're spending a lot of our time on unlocking basically this bank on yourself concept, or building really Bitcoin structured products and making it more useful in a way that's as true as possible to the underlying ethos of Bitcoin, meaning open source, community-led, global, 24/7, that sort of thing.
Mm-hmm. Yeah, it's funny. It would be really funny if after 8 years of building Ethereum, 100 different L2s, Solana, all these different things, if we just end up rebuilding the on-chain economy on a Bitcoin and it just ends up winning. I sometimes think about that.
Yeah, I mean, it's entirely possible. Definitely.
Yeah. I do think like a Bitcoin, like MakerDAO, MakerDAO's created DAI, stablecoins. I always thought it would make a stablecoin that's just purely backed by Bitcoin would always make the most sense.
Yeah.
Wait. Yeah.
We're actually building one right now.
Oh, okay, cool. Yeah.
We haven't really announced it yet, but I got that's a little alpha maybe for your users,
for your viewers. Decoded.
Yeah.
Awesome.
So,
we have a soft blog post out there, but we haven't gone too loud with it yet. But you can actually, the code's open source, so that's kind of the ethos of everything we do at Thesis.
What's it called?
So it'll be called mUSD.
Yeah.
And effectively what it is just like MakerDAO's DAI innovation with this multi-collateral stablecoin, right? Which technically it's not a stablecoin, but branded as such. And it's technically an asset, but there's underlying collateral. And what this allows and why people would want to do this, well, number one, we'll have great borrow rates for it. So that's pretty compelling. We think there's a tremendous opportunity for, lower borrow rates, and also fixed rates too, because a lot of the stuff you see in DeFi is variable. It's extremely hard. If you're trying to budget and use these stable coins in just paying down your bills or whatever, like real world use cases beyond just yield farming, right? It's pretty tough to just have average user that wants to manage their life with a variable fluctuating rate with different terms, and they might get liquidated overnight and lose their money, all these kinds of things. So what we're doing in the inspiration for this product is, we want to offer a way that for people to borrow against their Bitcoin and do it in a way that, they can put it to work in real world use cases. So effectively taking inspiration from the mortgage financial product.
Yeah. So that's really cool, by the way. I'm going to definitely take a look. I am kind of curious though, what do you think, I guess, looking out 5 years, one, actually, if you're willing to share, I would love to get your Bitcoin price target, but that's one thing. And then two is what do you see the impact of this Bitcoin on-chain economy as so just as an example, imagine Bitcoin, we 10x from here over the next 5 years. Do you think 80-90% of that is driven by kind of institutional adoption, and maybe we get another 10% of the increase in price is kind of just from the increase in fundamentals from this Bitcoin on-chain economy? Or I guess what do what percentage of I guess of the growth of Bitcoin over the next kind of like 5 to 10 years do you think is going to come from just kind of broader institutional adoption of Bitcoin versus kind of like more crypto native adoption of Bitcoin and kind of like the on-chain economy of Bitcoin growing?
Yeah, I think we are at the institutional mainstream inflection point right now. I mean, the U.S. president just launched a meme coin. I'm not sure how more mainstream you can get than that. So I'm feeling pretty good about the tailwinds behind the general digital asset category, and Bitcoin's obviously leading the way by a long shot. I mean, it's hovering around 2 trillion. Ethereum is like 300 billion. So there's a pretty massive gap, and I think it's only going to get wider, frankly, in terms of Bitcoin and the rest. Now, stablecoins are interesting because a lot of the stablecoins right now are dollar backed, right? So if this product that we're working on, and I know of others as well, like I think this is a pretty unique kind of category to pay close attention to. And but I think that the new money, net new money coming into the space will be broadly institutional, and then government as well, with the states in the U.S., right? I mean, I'm giving a pretty high U.S. perspective, but I think it's also being replicated around the world. That's putting pressure on Europe and Asia as well, in terms of treasury holdings, right? Because you're seeing this happen, like the MicroStrategy approach, but in different stock exchanges around the world. Like the Bitcoin Inc. guys are I think they just wrapped up like 3 of these, right? Kind of reverse mergers, and then having this MicroStrategy playbook. So a lot of that is really just more spotlight on Bitcoin. And that's going to continue to flow into the space. And then as the actual like regulatory clarity and guidance finally comes, which is what most of us have been asking for in this industry for like the last 7 years, that's going to open up, I think, and really be driving, I think, especially like altcoins, non-Bitcoin, because Bitcoin's clearly commodity. It's pretty clean and accepted from a regulatory standpoint right now. I mean, that's why governments are looking at it. And then that'll continue to drip down into the other categories of this asset class, these other chains, the products and services that are launching on these chains. And then they'll have these clear regulatory frameworks, right, which will open up and make it safer, hopefully, for retail investors to come in. And that's where I think, it's going to look, and, there's a saying, history rhymes, it doesn't repeat, right? But it certainly rhymes. And I think the stock market today is going to look, like kind of going like a Robinhood app. There's going to be this almost like parallel universe sort of thing in the crypto world. And then you're going to eventually see this convergence. And it's not going to be called crypto anymore. It's just going to be called, assets and stocks, right? And it's going to be it's going to be digitally native, powered by blockchain. But, that's sort of how I see the next 10 years shaping up.
Sorry. And then sorry, also, it seemed like you were going to give a Bitcoin price target as well.
Price target. Well, this cycle, I'm more of a glass half full kind of guy. I think we got we're in a little bit of a dip right now, but so it's February of 2025. I think by September we'll be running again. So I think this summer kind of will pick back up. I'm feeling about a 150, conservatively, hoping that we could kind of get to 250, but I think that's maybe a little bit of a stretch. But we'll see. Kind of depends on, I think, a number of macro factors. The dynamics right now are pretty well set up for a big bull run. But it does feel like there's a builder sort of lull happening in the market, because a lot of usually the way the cycles work is builders are going hard in the bear market, right? So kind of when that realized and unlock will happen, it's just sort of a slider. But fast forward 3 years from now, I think we're definitely crossing 250, if not more.
Awesome.
It's interesting. I mean, the price is a reflection of, the demand for the underlying asset.
Yeah.
Right. And the demand for the underlying asset has been driven mostly from ETF buyers who have, accrued like whatever, $30 billion of assets. The AUM is even higher because the price has gone up during that period. But what we're talking about is something a bit different. We're talking about how innovation can create other drivers of demand for Bitcoin.
Yes.
Beyond just like the HODL demand. So putting a price target, I find, is, very tricky. Like,
it is tricky.
Every other cycle has been based on the demand for the asset as it is versus what it could be, right?
Right.
What's that quote? Unburdened by what has been, looking to the future.
Yeah.
I feel like we should. This is
very timely.
I think it's time to start using that unironically to describe.
Yeah. I think the really interesting thing about the on-chain Bitcoin economy is that it sort of solves the biggest quote unquote tail risk that Bitcoin has in terms of like, oh, what's going to happen when we keep going through halvenings and the security budget keeps getting halved. And there's really two ways that can be addressed. One is just an astronomically higher Bitcoin price, which seems to be going well so far, and hoping that's the sort of solution. But the other kind of like more, I would say, somewhat more practical, or at least like kind of hedges Bitcoin in a sense, is obviously driving more transaction fees. And so the on-chain Bitcoin economy, to me, even if it has kind of almost no impact on the price, it's serving a huge purpose by increasing transaction fees on the network. Actually, I guess I have one last question, though, is there was some controversy, I want to say 2023 summer, so about a year and a half ago, when sort of ordinals, inscriptions, all those types of things sort of hit the Bitcoin community. A lot of the Bitcoin Stoics, as you call them, we're actually quite. Yeah, it's nice. It's like a nice way. It
sound a lot cooler than they really are.
Yeah.
Friendly Maxi.
I've met some of these Stoics. I don't know if Marcus Aurelius.
And the Stoics are now, going the way of. I think there's some that are launching Solana meme coins now, which is change. I saw some on Twitter.
But one of the things we actually had this guy Farmer Joe, who was one of the on our pod, and he was like early in this whole sort of ecosystem too. And I remember on our podcast with him about a year ago, we were talking about how there was like a little bit of a not too big, but like a little bit of a civil war in the Bitcoin community between those who just want Bitcoin to purely be sort of a savings vehicle versus those who actually want to build things and build, essentially increase transaction fees. So I guess we're not as, plugged into the Bitcoin ecosystem as you. Where is that civil war kind of like, has it kind of just come to a head and like the innovators have won, or is it still kind of like, boiling on the surface? Or do you think that will just be something that will always be there where a portion of the community is just...
It's muted. So there was definitely a bit of a civil war, or maybe not civil war, but just in terms of contention on, hey, is this good for Bitcoin or not? I think time will tell, if it continues to be good for Bitcoin. But, it's definitely not top of mind in the category. I think what is more top of mind recently is like staking and some of this sort of the next wave of like, how to get Bitcoin yield. That's where a lot of folks, I think, builders are turning their attention to, because you've seen an explosion, because it was really ordinals and like Bitcoin NFTs first, and then this sort of new next primitive came into play, like BitVM, right? And then now you have staking. So we'll probably go back to contending on Bitcoin NFTs at some point, I'm sure, when, ordinals start to rip again and become in the public sentiment. But until that time, it's, the attention's more on sort of these like yield products, because there's definitely a big sort of momentum and underfoot right now in terms of like actually I'm seeing quite a few projects being funded now that are like providing self-custodial yield on your Bitcoin. Like another example is Coinbase just announced a Bitcoin yield product, right? So, and I know several institutions are coming out with their own kind of version of this. Remains to be seen how they differ from the models of the past, but that's really where I think a lot of people's kind of attention and focus is right now. But I wouldn't be surprised if, we revisit this conversation in 6 months and ordinals are back in the sort of the conflict zone again.
So it was really an ordinal specific thing, is essentially what you're saying. It wasn't kind of
then the ones that are building in it were sort of deciding which standard made the most sense, right? It's like ERC20, right, with Ethereum versus these other standards. I mean, I don't remember all of them at the time, but ERC20 eventually won out, and that's kind of what a lot of the contention is around. And you've seen like Binance embrace BRC20s, for example. So we'll see, sort of how that I think plays out. I mean, it's a bit jurisdictional as well. Like Asia has a way different view. I was at Bitcoin Asia last year, the event, and it was just absolute mayhem and these NFT type events in terms of people attending. And then, it was at an NFT more focused event in the US, and it's just a very different crowd. So it kind of depends on where you are and what community you're part of, but it is definitely I think it'll continue to be a top focus. And then BitVM, as that continues to make progress too, it'll be more and more thrust in the spotlight, I think.
Actually, sorry, one last thing also, because before we actually jumped on the podcast, you had some pretty interesting sort of thoughts on how different Bitcoin communities, like even just within the US, but then also like it sounds like even sort of internationally, there's sort of different almost interests and passions within the Bitcoin community. Can you just talk really briefly kind of like the differences you're seeing in the Bitcoin, just locationally?
Yeah, I can give a little insight here. So there is sort of like two approaches, and kind of how like generally speaking the halving happens, and then there's typically with the cycles are roughly timed every 4 years with the halving, and the miners are the Bitcoin miners, the ones that have to deal with a lot of these dynamics. And it also many, especially in the US and Canada and Western markets, the miners are publicly traded, and it's a little bit different in the East, where several miners have China, footprint there outside of China. But I saw this sort of, we've been kind of watching this evolve, but two schools of thought to like kind of diversify revenue streams, especially because the last halving, now prices ripped a bit since then, but the price didn't move too much, right? And effectively the miners got their revenue cut, right? And so in the East, you have a much more aggressive kind of risk tolerance. And what we were seeing was these mining pools and miners put their Bitcoin balance sheet to work in DeFi and using yield farming actually as a way to diversify fees and revenue. And lots of projects all of a sudden overnight, I won't name any names, but were pumped with TVL, right? Or deposits, right? And then what do you think what happens when that project eventually launches, right? The Bitcoin is pulled and they make, they profit, right? Versus in the US and what I've seen with a lot of Western miners is they're not doing that. Now they might be buying Bitcoin and diversifying their treasury that way, or diversifying their revenue that way. And they've gained, with the price appreciation, but the miners in the West were actually getting into AI, and, they have all this, extra compute, and wanted to ride the wave of kind of the new AI wave, and appealing to investors to come in and buy some of their equity in exchange for kind of this, diversification outside of Bitcoin. So a little bit of a different
approach. That's incredibly popular in North America.
Yeah,
exactly. Like
exactly.
Miners are like, actually, we're an AI company now.
Yeah, that's right. So, but the East was doing yield farming. Yeah. I mean, they're getting into AI as well. Like I'm drawing a little bit, I'm exaggerating a little bit just for the comparison, but I just find that sort of fascinating in terms of like how the two sort of, East versus West, think about revenue diversification and deployment in the space when it comes to DeFi. It's just a very different approach. And I think kind of also illustrates like how cutting edge, a lot of stuff starts in the East and moves West. Right. We have team and partners and investors in Asia, and generally speaking, the trends start out there and then come rapidly west. So
it would be interesting. So what's been happening with the North American miners is that they were lagging the price of Bitcoin for a while because the economics of mining were getting worse because of the halving.
Exactly.
And then they made the pivot, or they diversified and said, and some of them have long-term power agreements and have capacity to support AI data centers. Some do not. It depends on the miner. But all of a sudden, it's like, yeah, if there's an insatiable demand for AI data centers or access to long-term power agreements, then miners are actually really well positioned. And I think what would be interesting is that with ever since DeepSeek, the miners have sold off quite a bit.
Yeah.
And the reason I think is a lot of people are now questioning whether or not there needs to be that huge data center build out. And if the miners are sort of like, if you need as much as you can get, you're going to take the miners in. But if maybe it's not going to be quite as large, then those miners begin to not look as attractive as they did before as AI plays. So now the question is, but now that we have a new administration in the U.S., the rules around what public companies can or cannot do on chain might also change. So what we might see is in the next 6 months, another pivot where like miner originally was like, we're an operating business that earns Bitcoin. Now we're an operating business that earns Bitcoin, but we have an AI option. Now we're the Bitcoin ecosystem company, right? Like it's possible you might end up in a scenario, to your point, where that happens, but where it happens in the public markets. And I think if they were able to, if they got the clarity and then they did that, I do think that they would benefit significantly. But it also requires people like you and like, it requires the Bitcoin like L2 and ecosystem story narrative to actually gain traction and mind share in the public.
Yes, that's right.
Because like the vast majority of public market investors have no clue that this is happening, only think of Bitcoin as digital gold if they think about it at all, and are not aware that there's like an ecosystem opportunity there. I think that changes. Brian, I know that you're a hockey player, and Wayne Gretzky used to have a saying that you don't skate to where the puck is, you skate to where the puck is.
Skate to where it's going. Exactly.
Skate to where it's going. So in a way, I actually think that this is like, it's like, will miners become Bitcoin L2 and ecosystem development shops with mining?
You heard it here first.
This is where you heard, like that is, if that happens, I'm going to show receipts from this podcast.
100%. And I'll actually take one step further. The ETF custodians are potentially an area where that could happen, right? Because imagine you're holding all this Bitcoin, you want to get idle yield on it.
Right? Yeah. So, what about real quick? I'd be remiss not to at least mention MicroStrategy. Is that that to me is kind of like the only, like MicroStrategy is obviously trading at a huge sort of multiple to its quote unquote NAV.
Yeah. BTC.
Yeah, and so exactly. And so to me, the only reason why that kind of made sense is that theoretically, if they accumulate enough Bitcoin, they could generate yield on their Bitcoin in ways, that I guess others couldn't, just given their sheer scale. I guess like that's kind of saying that there's going to be economies of scale to have, to this type of level of capital, which there probably is, I guess. What do you think about MicroStrategy, both kind of like right now and I guess also maybe just like on a long-term basis? How do you sort of,
I think that in terms of what, like from buying their stock, is that your question? Like, do I think it's going to continue?
No. Yeah, more just like their current strategy. Is this kind of like, I mean, a lot of people, I don't know if it's like the right comparison, but they call it like the Luna of this cycle. Just for our audience.
I do think the premium will continue. And I'm seeing actually quite a few others in the space actually kind of replicate, like there's some reverse mergers that have occurred in, you guys know one, and then I know like Hong Kong as well, quite a few others. And I think this will be, I mean, it's been successful for the companies that have done this. And so you're getting kind of, the word is getting out on this playbook, and we might see continually more and more players do this. I think I know of like 6 that have occurred. So if we're getting to like, 50, for example, well, then we might see some compression on that premium trade, because everyone's going to be, well, now there's 49 other options in the market, right? But that doesn't necessarily mean it's going to implode or be a catastrophic type event for MicroStrategy, right? So I think, Michael Saylor's pretty smart. I assume he's thinking this far ahead. I haven't had a conversation with him about it directly, but I do think that this playbook will continue to work for the foreseeable future, that what he's doing.
Yeah, I think I mean, it must be really fun to just buy billions of dollars of Bitcoin. must be pure euphoria every time.
Yeah, that's right. And then moving markets at the same time. It's pretty powerful what he's doing, which is great. It's great for the space, great brand name recognition, all of that. So I'm happy it's continuing to happen.
Well, Brian, just one final thing, like on the different companies in different markets trying to beat MicroStrategy. I think that, yeah, in the the more competition there is, the more pressure there is on premiums. But I also think that those businesses can be not confined to just being like balance sheet strategies. Like to the point
I agree
about the miners. It's like, why can't one of those companies that has a Bitcoin balance sheet strategy also be building on the Bitcoin network? And actually, that one company that I mentioned before the call, Matador Technologies, which is I guess one of the Canadian versions of this. They have a tokenized gold product that uses ordinals to basically record transactions in RWAs. As well as having a Bitcoin strategy. So like that's an interesting example of that. So I think that
I agree with that.
Where we're headed. And the miners too, I think, is another sort of way to do that too.
Totally.
All right. I think
an interesting thing to watch for the next 6 months. I think.
Yes, I agree. Wow, this has been one of the longest episodes we've recorded in a while, Andrew. And that's because there's lots of fun stuff to talk about. Bitcoin is an endlessly fascinating topic, honestly.
Yes, it is.
It's so funny because it's like, how can you keep talking about Bitcoin? It's like been around for 15 years. What's new? It's like, well, you can just keep talking about it. So we really appreciate you helping to kind of shine some light on some of the stuff that's going on in the ecosystem and some interesting sort of thoughts about what comes next. So thanks, Brian. Thank you very much.
Yeah, of course. Thank you for having me. Appreciate it. Yeah,
for sure. Well, that's it for this week's episode of DeFi Decoded. I'm Alex Tapscott here with Andrew Young. We had another great guest next week, a Solana guest. I won't say much more than that, but so you heard the Bitcoin story here. We're going to hear some Solana thoughts next week. So tune in for that if you're interested. And make sure to like and subscribe and share this podcast. It helps other people find it. Until next week, that's it. I'm Alex. Take care. See ya.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.